2011, and 2012. So now we are using the new accounting date, which happened to be by April. Now if we're going to use April, it's still 34, still on preceding year basis, 2009, which must have commenced by 1/5/2008. So the question now is, in the profit reported, where can we get May 2008? So we go to the question. This one ends by October 2007, so May can't be here. This one ends by October 2008 and must have commenced by April rather, 2007. So from November to October 2008, the May we are looking for 2008 must be here. So I will have to prorate that out. Now I need profit from, I actually need the profit from May 2008 to April 2009, but I can only get from May 2008 to October 2008. So I have to prorate that out. I will pick 1/5/2008 to 31/10/2008. So May, June, July, August, September, October. That's 6 months. 6 months out of how many months and how much? Where are we picking? We are picking from here. 744,000 times 12 times 744,000. 744. That's going to give us 372,000. So the remaining period I need now will be from November 2008 to April 2009. Once you have gotten your previous proration, the next month would actually be where you are looking for. So May that we use is here. Then the period we need from November 2008 to April 2009 would also be here. So we also have to prorate 6 months out of 816. So that's another 6 months out of 12 times 816,000. So 816 just divide by 2. That's 408,000. So if we add this up, it will give us a total of 372 plus 408. That gives 780,000. So we move to 2011. In 2011, the basis period will be 34/2010, and this must have commenced by 1/5/2009. So we'll now look for where we can get May 2009. The month of May 2009 would be here, which we have just prorated. So 6 out of 816. So we have to prorate that out to get what we are looking for. In the period, the year is going to identify or determine where you can prorate from. 09 to 31/10/2009. So I can pick 6 out of 12 times 816,000. We have just done that as 408,000. So the remaining one I need is 1/11/2009 to 30/4/2010. So to do this, I'll still have to go back to the question. You always have to visit your question. Of course, we have this starting by 11 and actually ending by 10. So it's exactly the period I need. Remember, that's also made up of 6 months. So the 6-month profit, 320,000. If we add up, it gives me 728,000. 728,000. So I can now go for the third year. In the third year now, our basis period will be 1/5/2010 to 31/4/2011. So we still have to find where we can get that. So we need a profit from 110 that is actually given. We have this already, 516,000 straight away. 516,000. So now we have gotten the accessible profit for those 3 years. All we need to do now is to add them together. 780 plus 728 plus 516. That gives us 2,024,000. Then compare this with the initial one, 1,952,000. Now that we have computed the accessible profit under the two methods or two approach, we'll see that the new accounting date gives more revenue or more accessible profit than the old. So since it's the tax authority that exercise the option, they will assess the company based on the new date. So it means in the 3 years identified, we are going to pick the profit for the new accounting date, and by so doing we can go back to our and fill the value. So here we are picking 1/5/2008 to 31/4/2009, and that is 780,000. Then here 1/5/2009 to 30/4/2010. That one was 728,000. And here we have 1/5/2010 to 31/4/2011, which was 516,000. With this, you have filled in all the tables and you will get all your full marks. The basis here is that you should be able to compute the accessible profit for the 3 relevant years, after which you would now have to do your comment. So our comment here is the tax authority will exercise the right under change and assess the company on the new accounting date. because a higher revenue will be generated. So if you're going to deal with the change in accounting date, you still have to follow the principle. Once you identify the year of change, pick 2 subsequent years immediately after that, then compute the accessible profit using the accounting date, compute the accessible profit using the 2 new accounting dates too for all the 3 years identified. Then by the time you are done with that, you do the addition of all the 3 years like we did. You add them up. Whichever is higher is the tax authority. Because it is the tax authority will be the one to exercise the tax authority will be the one to exercise the right of election by picking the higher accessible profit out of the 2 computations. So by the time you do this, you are done, you get all your marks. So the third aspect of cessation that we'll be looking at, basis period that I'll be looking at, is the cessation. That's cessation of business or trade. We have identified 3 situations in which a business can be assessed under an abnormal basis period. It's either the business is assessed based on commencement, change of accounting date, or cessation. The basis period of assessment under commencement has been considered. The basis period of assessment under change of accounting date has been considered. Now we'll be looking at the basis period under cessation of trade or business. Now, when we talk about cessation, it actually means a situation where the existence of the life of a business is brought into a permanent end. This is a situation which arises when a business permanently ceased operation. That is, the business organization is to be wound up. When this occurs, the provisions as contained in section 20 subsection 4 of the Tax Management Act and the Personal Income Tax Act, section 24 subsection 4 of the Company Income Tax Act as amended to date shall be applied. That is, what the provisions of the Tax Act regarding cessation of business says will be applied in the process of estimating the assessable profit and taxable income of a company when they cease operation. Now, we have identified what cessation actually means. It simply means when the life of a business comes to a permanent end. Why would business fold up, or what are the reasons why company fails, why business organization close down? Now, some of the reasons business fails is 1, bad management or decision of the management. Sometimes we as a management team make certain decisions or policies that will be unfavorable, decision or policies that are unfavorable to a business. Now, when such decisions or policies are made, it actually affect the overall or long-term objective of a business, and as such